So there's a reason why we have signs in this life. And if you think about the signs, let's think about roads. Anytime you're driving on the road, you have two ways to go. You can go up or you can go down. And even if you have to turn, you still have to turn to either go up or you can go down. Either way, you're choosing the direction. Price moves the same way. It can go up, it can go down, it can go sideways, but eventually it still goes up or it still goes down. And this is called correlations because we're correlating points in the market where we want to see price go. And we have to be the ones to trade those correlations. And we can do that by looking at currency pairs that correlate together or that correlate oppositely. Either you're going to trade a currency pair that's going in the same direction as another currency pair, or you're going to trade a currency pair that's going opposite of another currency pair. That's what we're going to get into today. Y'all, we need to talk. So yesterday I covered within my group, the Swing Trading Society, correlating currency pairs. I dug into a few currencies that I found correlate very well together, whether they move almost 100% of the time opposite or together of one another. But I also talked about currency pairs that can kind of play off of one another and show you what's to come so you can maximize or double your profits. And I'm going to show you guys that here today on a few various pairs. The pairs we're going to look at is going to be the dollar index, which the symbol is DXY. We're also going to look at USD Swiss, which is the United States dollar versus the Switzerland franc. We're also going to be getting into Euro USD, which the symbol for that is EUR USD. And we're also going to be looking at USD DKK, United States versus the Danish krone. Although that currency pair is not talked about a lot because it is an exotic, it is a pair that correlates directly with the dollar index. So we're going to be talking about that in more detail. Now, I've been trading for going on 5 years. And what I personally do is I trade from the comfort of my own home using only 15 to 30 minutes of my personal day. I am a swing trader, which means I hold my trades for more than 24 hours, sometimes weeks or months at a time. And that requires a lot of patience. But what that also requires is research. And when I say research, for me personally, I mean being able to technically see what's on my price chart and correlate pairs that move together or that move independently of one another. Now, there are going to be times when we talk about correlations, you'll find that some pairs correlate more than others. And pairs that correlate more than others, you can use those currencies to double and sometimes triple your profits, which just basically means you're going to make more money. Who loves more money? Because I know I do. We're going to pause for the cause here. If you're not subscribed, make sure you go ahead and click that subscribe button and make sure you follow me on Instagram because I'm hosting a free class this Thursday and I don't want you to miss out. Now, in the beginning of my trading career, I'll be honest, I did not believe in correlations. I thought that pairs only move independent of one another and you only needed to be focused on the setup. But I can admit to say that I was wrong. Correlations are real and they do help you in this market. And what made me become a firm believer of correlations was when I really started to look at the Euro USD versus the dollar index. What it does is it correlates oppositely of one another. And when I realized that when the dollar index goes down, the Euro USD is going to rise. And when Euro USD falls, the dollar index is going up almost 100% of the time. And that's when I became a believer of correlations. What I also started to see was that Euro USD and USD Swiss correlate oppositely of one another. So let's break down why this could potentially be happening. Number one, we have to realize that the dollar index is an index that measures the dollar strength, while Euro USD is a measure and the United States dollar Swiss is also a major currency pair too. What they both have in common is they're both paired with the dollar. When you take a look at the United States dollar within those pairs, one has a quote currency of the dollar, the other has a base currency of the dollar. And what this basically means is if you look at a currency pair and the quote is the United States dollar, it means that the United States dollar is the second currency within the currency pair. But it is the base currency within the currency pair, it's the first currency within the currency pair. So if we take a look at the strength and the weakness, if the dollar is rising, that means that the United States dollar Swiss should see a rise as well, because the dollar is rising and the dollar is first within the pair. So if the dollar goes up, USD, Swiss, United States dollar being first, the base currency should go up. And inversely, if the dollar goes up, we should see Euro USD go down. So here's an example of what I'm talking about. I have 3 charts stacked on top of each other. The top chart is the dollar index. It's the DXY chart. And the middle chart is Euro USD. The bottom chart is the United States versus the Swiss franc. And what you will notice is the top chart and the bottom chart mirror one another, while the middle chart, which is Euro USD, moves opposite. So this is the example of correlations. So with that being said, I just started to study correlations, and I realized that if I can find good setups within the correlations, I can maximize or double my profits. So if I'm looking to buy Euro USD, I should be looking to sell the United States dollar against the Swiss franc. I shouldn't be trying to buy both of them at the same time or sell both of them at the same time. Although sometimes it could happen that way, but as a swing trader, I have to look for the long view. And the long view says they move opposite of one another. Another currency pair that you can pit against the United States Swiss is going to be the Swiss franc versus the yen. Now, understand that these two pairs do not correlate 100% of the time, but they do correlate probably 70% plus. And here's what I mean. Maybe, and I'm saying maybe because over time, trends change. Over time, pairs consolidate. And over time, these pairs could move together and opposite of one another. So over time, 70% of the time, what could potentially happen is, because I'm looking at now a pair that has in common the Swiss franc, one being the base currency, which is going to be Swiss franc, one being the quote currency, which is going to be the United States dollar Swiss. If I take the comparison of the Swiss franc, and if I notice that on the Swiss franc is rising, what I should notice is that on the USD Swiss, or the United States dollar Swiss, that is falling, because 70% of the time they're going to move opposite of one another. Does that mean that I can buy and sell both of these pairs at the same time? Yes and no. What I mean is, you have to remember these pairs are still pit or valued against another currency. So I have to wait for the perfect time to strike or move, because 30% of the time, plus or minus, they may not be moving together. So I'll have to wait for the perfect setup to present itself. Now, I take this an even step further. We're talking about positive and negative correlations here. Positive correlations mean that pairs will move together in the same direction, while negative correlations mean that currency pairs will move opposite of one another. And because they're moving together or opposite, yet again, that is another way to maximize or double your profits. And for a bonus here, you guys, I'll tell you guys another currency pair that moves beautifully together. Now, this currency, just like Euro USD, is pinned against the dollar index. The dollar index is an index, so it's not a currency pair. But yet again, it still shows the strength of the dollar. And that currency is the United States dollar versus the Danish krone. What I've learned about this currency pair a few days ago, as I was back testing at 4 o'clock in the morning, this currency pair moves and correlates positively with the dollar index almost 100% of the time. So while Euro USD may be moving opposite of the dollar index almost 100% of the time, which means it's a negative correlation, I have a positive correlated pair, USD DKK, United States dollar, Danish krone. So I can now maximize my profit yet again. But please be aware and make sure you guys understand that the USD DKK is not a major currency pair. It's an exotic currency pair, which means that it's not majorly traded. So it may not even have high volume. But if your broker allows you to trade it, this may be a really good pair to add to your watch list. So now you get to triple your profits by trading the Euro USD negatively correlated with the dollar index, by trading United States dollar versus the Swiss franc, and by trading USD DKK, United States dollar Danish krone, positively with the dollar index. So this is how you can maximize your profits without day trading. Looking at the long-term view, finding setups that maybe only take less than 10 minutes to analyze, in less than a few seconds to click the button to pull the trigger while holding your trades for days or weeks at a time without you having to show up to your price chart all the time to actively trade these currency pairs. That's personally what I like to do. That's personally what I like to teach. And I teach people who are busy, who feel overwhelmed and overworked and don't want to add the chore of learning how to trade to their busy schedules. My job is to make sure that you can trade from the comfort of your own home by only using 15 to 30 minutes of your day without it disrupting your personal busy life. And if you found this video helpful and valuable and you want to learn more, you can come and train with me for 3 weeks. That's right, only 3 Tuesdays is all I need with you. We're going to work together each week for 3 weeks, 3 Tuesdays, and I'm going to show you personally how I trade this market. If you're asking if that's all the time you'll need, yes, I'm a no fluff trader. I'll train personally with you for 3 weeks, 3 Tuesdays, and within those 3 Tuesdays, you'll gain access to my personal trading method that you can practice and trade on your own. So without further ado, I'll talk to you guys later. You guys have a safe trading week.